Good evening. Welcome to tonight's webinar, So You Want to Be a Day Trader. I'm going to take you through some of the important things to think about if you're considering making a career, part-time or full-time, out of day trading the market, or whether you're already in the process of doing that. I think it's important to be realistic and have a real good sense of all the different things you need to think about. I think sometimes people think day trading is simpler or easier than it really is. It's not that it's really complex, it's just that there's a lot of different things to think about. So I want to give you a broad overview of that with this presentation tonight. So my overview of what I'm going to go over this evening is I'll talk a little bit about my background as a trader, describe what is day trading. We'll go into the sort of overview of my approach, what is an action candle, algorithmic trading strategies, how I measure performance, and a little sense of how much you can make as a trader. I'll then go into what you need to be a day trader, and that's knowledge, strategies, tools, process, capital, focus, emotional control, and practice. And that's not an exhaustive list, but those are the high points. And then I will describe how I can help you become a profitable day trader. I have been teaching people how to trade, and I'll go over some of the education options that we offer, also the active live service, what that is, how I use TradeStation, which is a software program for day traders. Nothing to do with me, I don't own it or anything, it's just something that I use. Talk a little bit about gathering experience and the support that I offer. And then finally, we'll just think about some of the other things to consider if you want to be a trader. You know, what brokerage to use, what's the tax structure, and things to think about in regards to tax. Regulations that are out there, practice environments, what they are. And then I have a special summer offer for anyone who wants to purchase the Active Trader course and utilize the different services and tools that we offer. And I'll talk about that at the end. All right, so let's get right into it. A little bit about my background. I started trading the stock market 30 years ago. I just had my 49th birthday yesterday, and I started when I was 19. So when I started trading, I wasn't really a day trader. I was probably more of a swing trader, which means I was holding stocks for days or perhaps weeks. I traded the Canadian stock market primarily back then, fairly actively, and paid my way through university doing that. I founded Stock Scores in 1999, which is the website that many of you are aware of, stockscores.com. And shortly after starting the website, I started teaching others my method in 2000. When I first started, it was more focused on longer term trading, but I have migrated to include day trading and swing trading as well. And I personally spend most of my time day trading. I wrote a book about my approach to the market called The Mindless Investor. I wrote that in 2013, maybe it came out in 2014, can't remember. It is a book that you can order from the Stock Scores website. It is not found in stores anymore, but you can order it directly from us. My sort of thing that I do is I develop trading strategies. That's probably my favorite thing to do. The actual trading of those strategies is, to me, kind of secondary. My joy is developing strategies, the processes, the tools for traders and investors. It's just what I enjoy the most. But of course, I also trade just about every day, and I will talk about that in a little more detail later. I also have a relatively small number of students. I teach less than 100 people per year my approach, and I give them a fairly high-level personalized support. Whenever someone that has taken one of my classes needs assistance, I'm happy to help them and guide them towards success in the market. All right, so what is day trading? Well, day trading essentially is being in and out of your trades within a day. So if you buy a stock at 10 in the morning and you sell it at 11:30, you have made a day trade. As soon as you hold stocks overnight, I consider that swing trading. Either way, it's very active. You are turning your capital over quite often, and that is what allows you to earn better returns than if you were just a passive investor. Because you're moving in and out of stocks quite actively, you're catching stocks that are moving, and then you're moving on to the next one, and that's why traders can make a lot of money with less capital, because they are using that capital, I would say, more efficiently, but it also takes more time. Day trading is not something you have to do every day, but when you do it, you have to be fairly focused. Most day trade signals come in the first half an hour, at least with my strategy. Or I should say most of the good signals come in the first half hour. We get signals all day long, but it is possible to day trade for the first half an hour, enter your positions, and then hold them through the day and then exit at the end of the day. I do think that it's necessary to sort of watch your stocks a little bit through the day, but there's apps that you can do that with your phone and that sort of thing. Now, I want to stress that most stocks, most of the time, are not worth trading. And I had to learn this the hard way when I first started day trading, once we had electronic brokerages, which weren't around when I first started trading. But when I first started, or when I really got into day trading, I would trade the same stocks every day. And I quickly learned that that's not a very effective way to be a trader, because most stocks, most of the time, just are not moving all that quickly. But every day, there are some stocks that move faster than the market. There are stocks every day that go up 20, 30, 40% in a single day. And those are the ones that we want to jump on board early. And by focusing on these fast-moving hot stocks, that is how we can earn returns that are far beyond the market's return. It is actively trading, actively turning over our capital in hot stocks. Now, there is a perception, I think, that day trading is risky or riskier than investing. In some ways, that is true. In other ways, it is not true. I would say in terms of risk management, it is easier to manage risk when you are day trading, because when you're holding stocks during the day and you're out before the close, you're not susceptible to the big price gaps that can sometimes happen when some bad news comes out on a stock. You know, a stock could be trading at $10, the market closes, they issue some really negative news, and the stock could open the next day at $7, and you can't get out at anything better than 7. When you're day trading, you don't have those kind of price gaps. So in that way, day trading is less risky. Where day trading is risky is not so much in the actual trading, but rather the person doing the trading. If you get your emotions involved, if you get caught up in the movements of the market and you start to gamble in the market, and it's easy for people to do, you can lose money very quickly. And so what is important, if you're ever going to day trade, is that you have discipline and good risk management controls in place. And if you don't have that, then yes, day trading can be very risky. For someone who is disciplined, who approaches it with good process, good structure, and good risk management controls, I think risk can be controlled quite well. We'll talk a little bit more about that later. So my approach, I use something called a stock scores action candle. This is my own indicator that I invented many, many years ago. And it is the basis for just about all of my trading strategies, because I want to focus on the stocks that are attracting strong buying or selling pressure if I'm interested in short selling. I want to buy the stocks that are moving up quickly because a large investor, maybe a hedge fund, an institutional investor, is accumulating a large position, and they leave a trail for me to follow. When a large investor wants to buy $10 million worth of a stock to take a position in that company, they are going to create abnormal trading activity in that stock. And the stock scores action candle is what seeks that out. It looks for abnormal trading activity in every stock that trades on the US markets. And we actually follow Canadian markets as well, but just not for day trading. And when I see that buying pressure coming in through my stock scores action candle indicator, I know that something's going on. So I want to show you what it looks like. This is a stock that was on my trading list today. And the action candle was right. I'm going to have to get my pen tool out here. Just bear with me for a moment. The action candle was right here. And you can sort of see there's a little pink dot there. You can also see some pink dots here. Those are all action candles. But the one that mattered the most was the first one of the day, and that was the point when the stock had a statistically significant abnormal price move with abnormal volume, and did so out of a predictive chart pattern. And so in this particular case, the stock OBLN, Obalon Therapeutics. I don't care what companies do. I just trade the market activity, but sounds like something exciting. At 79 cents this morning at just before 11 o'clock, it triggered my action candle indicator, and it moved from 79 cents to a high of $1.05, it looks like, closing the day at, what is that, about 95, 96 cents. All right, so on a percentage basis, that's a pretty big jump to go from 79 to 95. That's 16 cents on 79 cents. So that's like what, 22% gain in a single day, few hours. And it all started with my action candle indicator. And every single stock that I trade will start with that action candle indicator. Okay, moving along. And we'll touch on the action candle again in a moment. So I am what is referred to as an algorithmic trader. I use logic-based trading rules to define when I should buy, when I should sell. I don't trade on gut feel or on stock tips or on sort of throwing darts at a board. I trade when rules are met, and those rules can be encoded into a computer, and I simply let the computer tell me what is triggering a buy signal or a short sell signal. And then I do a little bit of human judgment to really put the best trades in my favor. And it takes maybe 2 or 3 seconds to assess a stock. So, a stock makes an action candle. There's some other rules that go into that. It's not just about the action candle. And so let's say there's 4 or 5 rules in my strategy. I've got some software, which I'll show you in a moment, that identifies that stock in real time before most people catch on to it. And then I look at the chart really quick, 2 or 3 seconds, maybe even less, and decide whether I'm going to take the trade or not, and then execute the trade. I only trade stocks based on algorithms only after testing that strategy over a large number of trades. And I'll show you a database in a moment to demonstrate how large that database is. But I literally have accumulated thousands and thousands of trades in an Excel spreadsheet to identify patterns that occur over and over again with my rules. I want to ultimately minimize human judgment and emotion. We humans have a tendency to screw things up, and algorithms and using a computer really give us an advantage because most individual investors are not doing that. They're maybe a little bit algorithmic, but they're not fully. And yet, probably half of the trading volume on the stock market is driven by a computer. Large investors, hedge funds, institutional investors, they are doing exactly this. They are using algorithms. And what I've tried to do is take algorithms and bring it down to the retail trader so that the normal person trying to manage their retirement savings or that sort of thing can do what the big guys and girls are doing and trade using computers as well. And I've made it very accessible through some tools that I offer, and I'll talk about that in just a moment. So before I get into sort of the strategy and how it all works, I need to explain first how I measure performance. So I always measure performance in terms of the reward for risk. So the reward that you earn for the risk that you took. And so on a trade that has $100 of risk, that should say of risk, not or risk, a trade that has $100 of risk that ends up making a $500 profit has earned a reward for risk ratio of 5. Now, if you have a trade that risks $100 that then suffers a $200 loss, then you have a reward for risk ratio of -2. And I make that distinction because we don't necessarily always lose just the risk amount. Sometimes we lose more than that based on where we have our exit point at. Now, my aim is to develop a strategy that has a positive average reward for risk over a large number of trades. So if we go back, I'm just going to go back to this chart here because on this chart, there are lines on there, and those lines represent the reward for risk ratio. So you can see we've got all these different lines, and this initial entry signal was at 79 cents. When the stock got to 82 cents, that was a reward for risk of 1. At 85, it was 2. At 88, it was 3, and so on and so forth. you can see that the trade maxed out at 8.5 times its risk. So to take $100 worth of risk on this trade required 3,330 shares. 3,330 shares times 79 cents a share is about, I don't know, $2,400–2,500. This trade ultimately went to 8 RR. So let's say you sold at 8. I wouldn't say it was actually, let's not use that. Let's say you sold here when the trend line was broken at 6.5. So that means you earn 6.5 times risk, which is $650 of reward for $100 of risk. And therefore this trade had a 6.5 to 1 reward for risk ratio. Okay, lots of scribbles on there. Now let's go look at just some of the action from today. So this is my list of the ideal entry signals on the buy side. We do shorts as well, but this was on the buy side from today. I just grabbed this after the close. What I did is I went through every stock that triggered an entry signal today, and then I eliminated all of those that didn't have the right chart pattern, and I ended up with this list of 36 valid trades for the day, and I've ranked them by their RR. So the most profitable was ROC. Let me get my drawing tool out here again. ROC, which had an 8 reward for risk ratio, and these are all the winners, and these are all the losers. There's always going to be losers. So Uber lost a 3.1 reward for risk for the day. Now we actually use stops, so some of these losses will not be that big. They'll still be a loss, but not as big. And most of these stocks that were profitable, except for this one, didn't get stopped out. So this particular trade where it was a minus 2.8, which is our drawdown, that one would have been stopped out, I believe. But the rest did fairly well. And so over this whole basket of trades, you can see that there's more green than red. And if you were to add up all these numbers and take away all of these, you'd still be profitable because that's the kind of day it was. Now, most people can't take 36 trades a day. That's not really the point of all this. We pick and choose the ones that we take. What I want to demonstrate, though, is just the effectiveness of the strategy for today. And we can then go look at what's called an RR curve. And so this is something I plot every day. This is actually the RR curve for yesterday. I'll show today's in just a moment. And so what we're looking at here is how all of those buy signals that came through the day, how they performed as the day wore on. And this is accumulation of all of the valid buy signals. So let's say yesterday there was 20 valid buy signals. At 2:10 in the afternoon, I kind of maxed out my profitability at just under 40 RR. So if I had 20 stocks and the total combined profitability was 40 RR, then I know the average profit per trade was 2 RR, which means if I was risking $100 per trade, my average profit per trade was 200. There would be some in there that were a 6. There would be some in there that were a -1. There's going to be a variation. But what's important is that as the day progressed, this starts at 9:34 in the morning and goes until the end of the day. You can see there 4 o'clock. And as the day progressed, the line was going up from left to right. That means that the profits were steadily accumulating through the day. Now here's today's RR curve. It was a very unique day because for most of the day, things weren't really doing all that great. We had, most of the day we were kind of around break even. Sometimes we were a little bit above 0 RR. Sometimes we were low. We never really got ugly. Never got down below -10, probably about -7 or 8 was the low point. And then the market really took off into the close as the market rallied. And now all of those trades really started to work and ended up being an excellent day and earning almost plus 60 RR today, again, on the valid trades. So when I showed you this, these numbers here add up to about plus 60. Okay, so this line is the accumulation of all of these stocks and their profits as it went every 2 minutes. You can see the times there, 12:52, 1:16, 2:42. So you can see how the profits grew in the final couple of hours of the trading day for that group of stocks. So that's how I measure performance, and that's a little bit about the performance of the market today and yesterday. Now, I told you that I had this huge database. I'm just going to show you that. So this is where I accumulate my stock market data. And so I can go into this tab right here, and this is every trade that has occurred, save maybe a couple of days I've missed since February of last year. So every day I grab data using some computer processes that I have, and I grab all of the valid entry and exit signals for the day and put them in this spreadsheet. And you can see this is my long tab. There are just under 75,000 entry signals on the buy side, and on the short side there are just over 53,000. That's obviously a lot. They're not all valid. They're all the ones that had an action candle through the day. We can add in some other filters, which we do here with this page, where I can add in different filters for my different components of my strategy. And then we also add in something called a market factor, which determines whether we're long or short. Some days we're predominantly long, some days we're predominantly short. And then we can add up and figure out the total profitability. So today, for example, from 9:30 till 10 a.m., the trades earned 31.48 on 17 trades for an average profit of 1.85, and that's on the long side. On the short side, also profitable, but not as profitable. Now I can change the times because I've got this big database. I could say, show me all the trades from 11:40 till 1:30, 13:30, and it will calculate the profit for those, which was 11 on 18 trades for 0.62. Now this was yesterday. I don't have today's data in there yet, but if I had today's data, you would see that that was actually a very profitable time of the day today. The average was probably about 1.6 RR, 1.7, maybe a little better. All right, so that's the database that I talk about when I'm talking about the performance of my strategy. There's no opinion, there's no human judgment. Well, there's a little bit in terms of the chart pattern evaluation, but it's not, like I see a lot of traders show you their last trade where they made some money on it, and they're like, look at this great trade I made, and that's on one trade. Having a sample size of one does not make you a good trader. When you have thousands of trades in a database to demonstrate the effectiveness of the strategy, now you've got something real that you can see is repeatable over time across different market conditions. So how much can you make trading? Well, I'm going to speak specifically about my strategy because that's the one I do, obviously. So my strategy generates between 50 and 100 RR per week. Now that would be if you took every valid trade, and we saw today there was 36 valid trades. Most people can't do 36 trades. They don't have the capital or the speed to enter that many trades. So let's say you can only do 5 trades a day. Well, then you're probably looking at being able to get 5 to 10, maybe even 15 RR per week. And so what I'd like to sort of demonstrate is something realistic for most traders, because most traders, their performance will be limited by their capital and their experience. And a good goal for most traders is to do 10 to 20 RR per week. And if you are risking $100 per trade, then that's $1,000 to $2,000 per week. If you have more capital and you can risk more per trade, then something like $500 of risk would be $5,000 to $10,000 per week. Now the capital required, this is an important consideration. The capital required is generally 100 to 300 times your risk amount. So that means if you're risking $100, the sort of minimum capital requirement to risk $100 per trade would be $10,000. You can get this a little lower if you focus on lower price stocks. Stocks under $10 tend to not require as much capital. But I think for most people, that's a good metric. Now, maybe you're only going to risk $50 per trade, then you're looking at $5,000 of capital. And from that, if you can make 10 to 20 RR per week, then, if you're doing it well and you're disciplined and you have good process and that sort of thing, then I think realistically $500 to $1,000 a week is not out of the question. Now that on a percentage basis for the capital that you're using is a very high percentage return to make that much money on your capital. And I have a lot of people sometimes scratch their head and say, well, I thought the stock market earns 8% a year. How can you possibly be making 10% in a week? And the reason is because you're using your capital very aggressively to turn it over actively. And as long as you have a good strategy and it's effective and you have good discipline to put that strategy into work, then you can earn dramatically more than the market return, but you're also putting in a lot more time. A passive investor that puts money into an index, at the end of the year, they say, okay, I made 9%. They didn't do any work, right? They just let it work. Day trading is work. Like, you are sitting there in front of your screen and you are working, no different than going to a job where you're working to generate your income on an hourly or daily basis. So what do you need to get there? Let's say, Tyler, I want to be a day trader. What's the list of things that you need to have? Well, the first is you need to have some knowledge. Day trading is simple, but it's not easy. And you need to understand some theory. Why do stock prices change? What makes some stocks make big price moves, whereas others not? You need a way to find these stocks, how to evaluate them, how to be able to look at a stock and know within a second or two whether it's worth trading or not. How to manage your risk effectively, ultra important, risk management. How to know when to exit the trade. How to manage your emotions through the trade. That sounds like it's not that important, but it is extremely important to keep your emotions out of it. What you should have in your written trading plan. All of my students are encouraged to create a one-page trading plan for their trading and to run it past me, and I can give them some feedback on that. And then what are some of the things that cause success and failure? You should know that going in so that you can avoid the things that cause failure and focus in on the things that bring success. You're going to need a strategy. As I said earlier, love to develop trading strategies. I've been doing that for a very long time. And I've got many strategies, but for my day trading, I primarily have one strategy that I do every day, day in, day out, because it works well. But that strategy has been well tested. I just showed you that database where we had thousands and thousands of trades in that database so that I can prove to myself that it works. And without that data, you can't do that. So it's very important to test your strategy over a long period of time across different market conditions so that you can really fine-tune the strategy and prove that it is effective. It's only in the trading data that you can really know or tell that a strategy is effective. Oftentimes people will judge the success of their trading or their strategy based on what happened on the last 10 trades. That's really not sufficient. You need to judge your performance on the last 100 trades, or better yet, 1,000 trades. Anyone can throw a coin and with a little bit of luck throw 3 heads in a row. But try throwing 30 heads in a row. The odds of that happening are very, very low, right? And so what you want to do is test a strategy over a very large sample size so that you can see that performance isn't a fluke. You don't want performance that's accidental. I think that strategies should be very simple, very concise. I've seen people develop strategies that have way too many rules or too complex. The best things that work are the simple things. And the simple things have to be based in some pretty strong theory, and maybe some sophisticated math might go into that. But still, I can write down my rules on a napkin, hand them to you, and most people can understand them pretty quickly. And then it just takes practice to execute them well. You're going to need tools because there's thousands of stocks out there. How are you going to find the right stocks at the right time? And so I categorize tools in 4 different areas. First is the analytical tools. Those are what I use to identify opportunities. Then you have your order entry tools, how you actually buy and sell the stock, which is a tool that you would get from your broker. You have trade management tools where you can monitor the performance of your holdings. That helps you to know when to exit them. And then I think it's important to have that post-trade analysis. Every trade is a lesson. You've paid tuition for every single trade. So accumulate your trades in a spreadsheet or build a trading log or journal of all your trades, because that post-trade analysis can be very valuable to making you a better trader. Without powerful tools, you're going to be part of the crowd. You're going to be following the people that are always late. And I don't want you to be late. If you're going to make money in the market, you have to be there early. And tools that are powerful and unique should give you an edge in the market, give you a way to beat the crowd. Most traders don't make money, but a small number of traders make lots of money. And it's those that have an edge who have the best chance of being profitable. Another thing that you're going to need is process. A proven strategy is only as good as the process to find the trades before it is too late. And I think most traders focus too much on the rules of their strategy, and they fail to focus on the process to find the trades in a timely way. So what are the steps, step-by-step method to find and execute your trades? And that process has to be really simple, mechanical, not leaving a lot of room for emotion. And without a good process, even the best strategy can fail because you're just too slow. And so process is very important. Then, of course, you're going to need capital. Now, our number one goal in trading, at least what I preach to my students, is capital preservation is our number one goal. We want to start slow with our trading so that you don't risk your capital. And in starting slow, I recommend to all of my students that you trade with no capital. Start with no money. Learn first. Practice for a while first. I don't care if you have $10 million. Use $0 when you're starting so that you can learn. And as you gain experience, as you get better at it, you can slowly increase your risk amount. So you start with $0 of risk per trade. That's paper trading or simulated trading. And then maybe you step up to $50 of risk per trade, and then 100, and then 200, and so on. Slowly increase your risk as you gain experience and confidence. Focus. Trading is simple but not easy. You got to sit in the chair and you got to do it. And there's just no other way. You have to focus when you are trading. Now, as I said, you don't need to do it every day. You don't even necessarily need to do it all day. But if you're looking for opportunities, it takes focus. You can't have, your kids pulling on your sleeve or other distractions because it's a job. And, a heart surgeon has to focus on what he or she is doing, and a trader does as well. Just because you work out of your house and maybe you live in a beautiful place where you work, because trading does give you that freedom, you still got to be focused when you do it. A few years ago, I lived in Hawaii. I lived on Kapalua Bay. I sat at my desk. I looked out on the ocean. It was literally, 50 meters from my trading computer. And there was times when it was pretty hard to focus because, I'd rather be out swimming with the fish that were right outside my door. And, you have to have that focus if you're going to trade well. And my office now has windows, but all of the blinds are closed. It's dark. I'm just 100% focused on my screens when I'm trading. Emotional control. Humans are predisposed to fail in the stock market. You have to have the discipline to follow rules and manage risk effectively. And if you don't have those things, then you will fail. Again, great strategy, great process. If you are emotional, you don't have discipline, then all of those good things will fall apart. And there's ways to overcome that, and I can teach you those things. But without emotional control, you're going to have a tough time. Practice. Trading is no different than becoming a good hockey player or a good skier or a good heart surgeon. It takes practice. And I can give you all the rules. I can hold your hand. I can walk you through the processes. But there's still just no replacement for repetition. You're going to gain experience with time and doing it over and over again. You want to get to the point where you really don't have to think a lot. The trades just come naturally. I'm at the point where I can look at a chart and in the snap of a finger, I know whether it's good or not. And that comes with having done this a long time. Now, you don't have to do it for 30 years to get to that point, but it does take time. And I caution people who think that they're going to become successful in their first week of trading. It's not realistic. Don't expect that. Expect that you're going to have to put in some time to practice and get good at it. Now, I want to talk a little bit about how I can help you. As I said at the top of the presentation, I teach about 100, a little less than 100 people a year typically. And I created a course, which is online. I'll show you it in a moment. It's called the Stock Source Active Trader online course. And there's videos, there's written lessons, there's tests, there's assignments, all online to teach you the knowledge, processes, and strategies to use my trading strategies. The Active Trader course is primarily focused on day and swing trading. For those of you that might be interested in longer term investing, I have a course for that as well. It's called the Investor Course. I'll show you where you can learn more about those courses in a moment. I'm not going to spend a lot of time trying to sell you on these things, I'll direct you to a page where you can learn about that. But the active trader method can be applied either full-time or part-time, and it really just teaches what I do every day. I sit in a chair every day, sometimes I stand, and sit in front of two big 40-inch monitors and trade all day. And I run a webinar where people can watch my screens. I'll talk about that in a moment. And I've been doing that for 30 years. I love it. I wouldn't want to do anything else, although I sometimes get sore knees because I've been sitting for so long, but I try to also get out and do some fitness at the end of every day, ride the bike or go to the gym or whatever. And you have to do that. If you're a trader, it's a pretty sedentary existence for the days or the hours that you are trading. And so I'm a big fan of staying healthy through other things. All right, so that's the active trader course. And I'm going to show you that. I'm just going to jump over to the Stock Scores website. And if I go into the Education Center here, so I've logged into the website. Obviously, I'm a member of the Stock Scores website, and go to the active trader section. And I can see the different modules here for different strategies. So the day trader strategy, I can read the lesson by clicking on the little folder. I can click on the video and watch a video that outlines that particular strategy. That's the actual strategy rules, but there's also the theory, which is in the foundation area. And so things like how to read chart patterns, exit signals, risk management, when to scale into a position, all of those things are covered here. And then there's an investor section as well for those that are more interested in the longer term style of trading. And again, those are the strategies. There's a lesson and a video. For the theory, we don't only have the lesson in the video, but there's also an assignment and a test. I encourage you, if you want to learn more about this, go into Trader Training, learn how to trade. And there's a number of videos and descriptions here that you can check out just to see how it all works. I'll come back to that in a little bit. So that's the Active Trader course online. Now I also have a service called Active Live. Active Live is essentially you watching my trading screen through the day, or my analysis screen. So I've got a completely automated process to identify trades as they happen through the day. I don't actually do the work anymore. I've had the computer program to do it all. The only thing that I actually do is execute the trades. But you can watch the same screen that I use to see the trades that I'm trading. And it's a webinar. You log in 10 minutes before the market opens. 5 minutes before the market opens, I give a little pre-market discussion about where I think the day is going to go. So for example, today the market was gapping up on the open, and I said best to favor shorts on the open or be very selective with longs, but then look to buy stocks once a pullback, a downward trend on the 2-minute chart was broken. And that ended up being exactly how the day went. The market opened strong, it went lower from the open, and then it broke its downward trend line a little after 10 o'clock, and then again a little later in the afternoon, and rallied very strong into the close. And so my plan before the open ended up panning out perfectly. Doesn't always happen that way, but it happened nicely today and yesterday. And you get that commentary from me. You get my comments that I inject during the day. I'll sometimes come on the microphone and say some things as I think it is appropriate. But for the most part, you're just watching my analysis screen where my trade signals are executed in real time. And it's the exact same screen that I watch to determine what stocks to trade. So you're basically it's like you're sitting with me at my desk. You can listen to me talk, you can type questions to me, and you can just see the signals as they come up. Now at the end of the day, the final half an hour, I usually try to teach a little bit from the day, give you some lessons about how the day went, show you how to read some charts or talk about stops or different things. I try to throw in a little bit of education every day because I feel like it's my job to teach you. And it's not enough just to say, here's some videos, here's some written stuff to look at on the website. Let's actually learn based on what happened today and learn sort of on-the-job training. And that's a big part of what I do. And I think that's really important to becoming successful. Now, the Active Live service is only available to people who have completed the Active Trader course. Now, I'll talk about pricing and all that kind of stuff in a minute. But you essentially are eligible for Active Live, which is $195 a month, if you have taken the Active Trader course. And the reason I do that is I actually don't want to have hundreds or thousands of people watching my screen. You can imagine if that many people were watching my screen, executing the same trades that I'm trying to execute, that we'd all be getting in each other's way, and it makes it just that much harder to be profitable. With a relatively small group of people following my trading, I can still make money. My students can still make money. We're all happy. If you have too many people following a leader, it just doesn't work. And I've seen chat rooms in the US in particular where there's 500, 1,000 people all following the leader of the chat room. And really the only one that makes money in that is the leader of the chat room, because they can say, I bought Amazon. 500 people go in and buy Amazon right afterward, bumps the stock up, and that person can sell into the strength. I think that's unethical, and I think it's just a bit of a scam on how to really make money by manipulating the market in some ways. All right, now TradeStation is a program that I use. It's the program I use to do my analytics. It used to be that it was kind of a requirement for my students to use TradeStation, but because I have Active Live now, it's not really that important anymore to use TradeStation. Now, I think if you're a serious trader, you've been doing it for a while, you've practiced, I do think there's all kinds of advantages for using TradeStation, and I encourage people to use it, but it's no longer as much of an essential item as it once was. Now, I have created my proprietary indicators like the action candle, and there's others, for TradeStation, and I give those indicators to all of my students, and they're going to help you find good trades quickly. Now, you can also just use Active Live. It's going to give you the same signals. Some people want to be more independent, so they use TradeStation with my indicators, and some would rather just watch my screen, and that's fine as well. It's really up to you depending on the style that you want to employ. I've created some educational content for how to use TradeStation that's quite valuable, and all of that is part of the Active Trader course as well. And then the other thing I think that I can really bring, and it's probably more important than anything, is my experience. After 30 years of trading and 20 years of teaching, I really have the experience to help you succeed, not only in teaching you when to buy and when to sell, but also understanding why you make the mistakes that you make, because I have made all those mistakes. I still make mistakes. And, when someone sends me a question saying, I bought this stock today, what did I do wrong? Sometimes you've done nothing wrong. Not every trade is profitable. But a lot of the time I can see a mistake there and I can give you some feedback because I've been doing this for so long. And that's going to really ramp up your learning curve and get you to profitability that much sooner. In the early days when you're learning, it's challenging to be out on your own. You're sitting in your home or your office trying to become a trader, not having someone that you can ask questions to that has the experience and insight to give you a good answer. And that's something that I can provide as well. And that's really part of the support. When you need me to evaluate some trades, send me an email with the trades that you did that day. I can look for patterns of success or failure and try to help you be better. I only provide that kind of support to my active trader students. I also do it during Active Live. You can ask me questions during Active Live, although I prefer email because I can give you a more thoughtful answer. And, every day we're being taught lessons, so why not utilize those lessons to become better? And I'll help you with that. So some other considerations if you want to be a trader. Let's talk first about brokerage. So if you're going to day trade, you need to be with a broker that is suitable for day trading. That means they have fast execution. They have an ability to enter the orders quickly. Their commission prices are low. They have good tools for order management and position management. They have real-time charting so that you don't have to buy it. And so, not every broker is good for that. Some of the bank brokers here in Canada where I live, they just don't have the fast order execution and the fast order entry platforms. You're going through a website. It's best if you're executing your trades through a software platform. So I use interactive brokers. I'm not here to endorse them. I have a hard time saying you should use them because they're not user-friendly. Their tech support is poor, but their commission structure is good. Their platform is very sophisticated. It's reliable, and it has real-time charting, all the things that you would need. But if you're looking for a simple-to-use, no brain damage kind of platform, IB is not the one. Theirs is complex. It takes a long time to learn. I'm still, struggling to know everything that goes on in that platform, and it's not organized very well. It's not well designed, but it has some great features. So it's kind of this give and take. TD Broker has their Thinkorswim platform. Questrade has an online or a software platform. There's others. Disnat has a software platform. So there's different ones out there. Take the time to learn about them. Let's talk a little bit about taxes. If you become a professional trader, and that is your primary occupation, it's where you make most of your money, it's where you spend most of your time. Here in Canada, where I live, the tax people are going to determine that you are a professional trader. And that means you are no longer able to get the capital gains exemption as an investor would, which means you're paying tax at the full rate. And so at that point, when that happens, it's a good idea to set yourself up as a corporation, because the corporate tax rate is much lower than the personal tax rate, and you can grow your income better. So let's say you make $500,000 in the market, your corporate tax rate on that is, I think it's 16, 18%. I can't remember. Maybe it depends on what province you're in. So you can grow your money at that, and then maybe you take out whatever you need to live, 100, 200 grand a year out of your profits to pay your bills. But then you can still keep the balance of it in there to grow that capital base, right? So you need to understand tax. Now, I'm not an accountant. I'm not going to give you tax advice because I'm not really qualified to do so. But it's not that complicated. Like at the end of the month, you have your statement. You started the month with 100 grand. At the end of the month, you had 110,000. Obviously, you've made $10,000. Now, if you went from 100 to 110, but you took out 10 along the way, well, you actually made 20, right? Because you took out 10 as well. And so real simple accounting, like when I file my tax returns, I don't include every single trade I make. I mean, literally that booklet of trades, it was an inch thick. And so, it's not realistic to put those all in there. We just calculate the profit per month and, put that net gain in the taxes or in the income statement for my business. And then I have all the trades backed up. So if ever I was audited, I can throw them the piece of paper or the stack of paper so that they can review that. Whether that's the right thing to do or the perfect thing to do, I'm not here to tell you that. I'm not an accountant. That's what I do. I actually have an accounting firm that does it for me. And I think it's real important if you become a professional trader to go to an accountant and get some advice on how to best do it. I'm not an expert. All right. What I know is that the small business tax rate is way lower than the personal tax rate. You can dividend yourself out your income. There's qualified and non-qualified dividends, and there's lots of things to think about, but I don't want to give you that advice. Regulations, where I live in Canada, there's really no regulations around day trading of stocks. And so it's not really that big of a deal. In the US, there's something called a pattern day trader rule, where if you're going to actively trade the market, you need to have at least $25,000 of capital. I don't know what the rules are in Europe or in Asia. I don't follow that closely enough, but you should check into that, because there may be regulations where you live that affect, how you file your taxes, how you record your trades, how you execute your trades. And that's important to understand that. Another thing to think about is a practice environment. Now, you can paper trade by simply putting trades in a spreadsheet or writing them down on a piece of paper. That's simulated trading. I have a trading simulator at tradescores.com. That's TradeScores. It's free to use, and you can go there and practice, tradescores.com. And what's nice about it is it records your performance and reward for risk terms. You actually enter in the trades just like you would with a broker, and just track your results that way. Practice first so that you can preserve your capital. That's what's most important. All right, so let's talk about this special offer that I have for the summer. So the Stock Scores Active Trader course is 3,495 Canadian dollars. That price is the same today as it was 10 years ago. I haven't raised the price. I probably should. Maybe I will in the fall, but that's the price. In addition, for the month of July, anyone who purchases the Active Trader course will also receive 2 months of my active live service. So you can watch me trade and watch my trading screen for 2 months. It doesn't have to be August or July. It can be whenever you want. It can be in December if you want. It's up to you. You get 2 free months. Normally you get 1 month, but I'm going to add an extra month for the remaining time here in July. And you can, as I said, use that active live service whenever you want. I also have a couple of videos that are bonuses. I did a foundation 2-day class. It's about 3 hours each video, and it goes into the theory of everything and kind of walks you through all that. I'll include those videos to anyone who purchases the course up until July 31st at 11 p.m. I think July 31st is a Thursday, maybe it's a Wednesday, midweek, so stay on top of it. But anyone who purchases the Active Trader course before July 31st at 11 p.m. Pacific Standard Time will get whatever that is, $585 worth of free stuff as a bonus. And in addition, if I do a class in the fall, which I usually do, there's usually another foundation class when I do that. I'll give you that as well. But basically, there's some incentive to not sit on the beach, not go to the golf course, and instead learn how to trade in the summer so that you can be ready when market action picks up in the fall. Now, to register for the course, here's what you got to do. Go to stockscores.com, and under the Learn menu, select Learn How to Trade. So I'll just show you that. Go to Trader Training, Learn How to Trade. Trader Training, Learn How to Trade. That takes you to this page that we're already on. And you can purchase the course right here. Just go Order Active Trader, and you will see there the price. See also here it says $300 yearly. You don't actually have to do that. That's to use the Market Scan tool. You get 6 months of that tool for free, and then after 6 months you pay $300 a year if you want to continue to use that tool. If you want to use the Active Live service, that's $195 a month. It's well worth it. It's cheaper than subscribing to TradeStation. You're going to get me showing you what to do every day, and I think it, really has a benefit to any trader. And you're only eligible for Active Live if you do the Active Trader course. So anyway, you go here, you go to Final Checkout. It asks you for your address and stuff like that, and away you go. Okay. And once you register online, you have instant access to the course material. So you don't have to wait for anything. It will update it right away. You can start watching the video, start learning. Whenever you're ready to do Active Live, it's a week, whether it's 6 months, doesn't matter to me. You just email me and I'll give you your free 2 months. Once you are registered, then you can start reviewing the information in the Education Center, and away you go. Now, I just want to launch a poll because I always like to follow up with an email for anyone who's interested. So I'm just going to launch this poll. If you wouldn't mind, please answering this. If you're watching this as a video, I am recording this tonight. You can email me if you want some follow-up information. I'll give you my email address in a moment. So I'll just leave this up for a moment and just click on the poll, what you would like to do. If you don't want follow-up information, just say no, I won't bug you. Leave this up for a moment, and I'll send you an email in the next day or two. Give this another 20 seconds, see who's paying attention here. So far we've got half of you have voted so far. Now in a moment I will put up my email address. If you have any questions for me about the course or trading, whatever, you can fire me an email. I trade all day. A lot of the time I spend trading is waiting, and so I tend to answer a lot of my student emails through the day. All right, I'm going to give this another 10 seconds, and then we'll close the poll and wrap up tonight's presentation. What time is it? Oh, almost an hour. Perfect. I wanted tonight to be an hour, so okay, so I'm going to drop this down now. Thank you for everyone who's voted or answered. And let me just finish this off. So as I said, I did record tonight's presentation as a video. I will send out a video link to everyone, hopefully tomorrow. So that if you want to go through it again, or if you want to email a friend the link to the video, you're welcome to do that. So what are some of the benefits of doing Stock Scores Trader Training? The tools and strategies that I have created give you an advantage over other investors. I have invested hundreds of thousands of dollars in my tools. I have invested 30 years in developing the strategies, and thousands of hours developing and collecting data. The price, when you think about all the work that goes into those strategies and in that course material, the price is really cheap. You could easily spend 10 years of your life trying to do what I give you in that course, and you still wouldn't have it all. So I really think it's quite valuable. In addition, the support that you get from me as you're building your skills and getting confident is going to be so valuable. It's just going to give you that much less uncertainty. The exclusivity of stock scores, I don't market to a lot of people. As I said, I teach less than 100 people a year, and that means you're not competing against a whole big group of investors and traders. Risk management is our number one focus when we're trading. Capital preservation is most important. And ultimately, my courses will save you time and money. I have no doubt about that. If you have any aspiration of trading, you should get someone to teach you how to do it, because it's not as simple as it looks, or not as easy as it looks. And it does take time to learn, and I'm there to help you through that process. So there is my email address, tylerb@stockscores.com. If you have any questions, you can email me there. You can also follow me on Twitter, and the Stock Scores YouTube channel is getting quite popular. Just go to YouTube and search for Stock Scores. I put up at least one video every week with my market commentary. I'm going to try to do a few more videos, probably more towards the end of the summer. I'm enjoying the weather still. So if you do the investor course, which is $24.95, and then you want to upgrade to the active trader course, that is an upgrade fee of $1,250. And if you do the active trader course, then you also get all of the material in the investor course, so you don't have to pay for both. And it really comes down to what your focus is, whether you want to be a day trader, a swing trader, or an investor. And different courses cover that. If you go to that Learn to Trade page that I showed you on the Stock Scores website, lots of information on there. There's a few videos. I didn't want to spend a lot of time on being salesy. I wanted to give you a broad overview of how I trade the market and that sort of thing. Someone's asking me, do I trade every day? I trade most days, not every single day. Sometimes I, go away or whatever, travel. But for the most part, I trade every day, and I've been doing it for 30 years. All right, so I think I'm going to wrap it up there. As I said, I will have a video for you tomorrow, and I want to thank you all for joining me tonight. If you have any questions, don't hesitate to email me. Again, my email address there on screen, tylerb@stockscores.com. Have a great night. Trade well. Talk to you soon.